We welcome you into Everything Money. This is Seth, Paul, and Mo. We look at stocks. We look at businesses. We will be doing more real estate when everything calms down. But currently, we're doing a blind stock analysis. What is this, you may be asking yourself? Paul has been a great leader and coach to me in the past few years about really looking at a company like I'm buying the whole company, like Warren Buffett would say. You know, if I would buy this company, if I bought my neighbor's company, maybe he does some sort of, auto care down the road, I'd want to know, what kind of money does he make? How much debt does he have? And not so much like, is he in the news positively or negatively? That would be sort of hype investing. And so we'd like to take a look at, a company that Paul's never seen, has no clue what it is.
Never seen, or just don't know what it is? There's a big difference.
Say that again.
Never seen the company? Because I'm pretty sure I think I know what company it is already.
Shut your mouth when you're talking to me.
I think I do.
Don't spoil it, you monkey.
I think I do. I'm going to text the group.
We're going to...
I want to see the... I want to see
right now?
Don't say it. I want to see the numbers.
Don't.
I can't see
please
anything.
Then I'll text Tim privately.
All I can see is the chart.
We're going to show Paul just blind financials. He has no clue. Apparently, he has some clue. I don't know how this is possible with like 40,000 different companies out there. Paul, take a look use our 8 pillars to look at a company. Are you interested in this company regardless of the name? Go ahead.
I got it right.
He's on it. He knows.
Don't say it. Let fondle our viewers on the way.
That's only happened once before. It was our very first one. I got it right. So I did get it right.
All right, let me hear some numbers.
Don't tell until the end so the viewers say.
Yeah, don't sway our viewers. They're guessing along with you, Paul.
Okay, 5-year PE of 12.4. That's pretty solid because we want less than 22.5. Reasonably good return on invested capital. It's over 9% like we want. I'm actually surprised by the dividend. If I'd seen the dividend beforehand, I might have been like, oh, I don't know if they pay a dividend or not. But there is a slight dividend here that you can easily afford. It only pays out like 10% of their free cash flow last year. So far, I like it.
Okay. Pillar number 3 is revenue growth over the past.
I'm going to give Mo a hint later about this one too. And I think if I give him a hint, he'll get it right.
Here's your revenue over the past 5 years. Well, 10 years.
Oh, wow. Big growth. 8 billion to 12 billion. Okay. Go ahead.
Check, please.
How about
net income?
Net income is pillar number 4, Paul?
593 to 1.66. We all like that.
That's pretty good too.
Tickety check. No idea yet, Mo?
I do have it. I have an inkling.
How about shares outstanding? It's down there, Paul.
312 down to 262. Okay, check mark there.
They're doing everything right, Paul. Okay, this is all pillars, right?
Yep.
I think I know
All
the sector.
checks so far. Hold on a second, Mo. You crazy.
Mo, text me. You say you think you know the sector?
Yeah.
Text me.
We're going to look at pillar number 6 is total long-term liabilities divided by 5-year free cash.
And I think the 5-year free cash flow is 1.1 billion. So we want the total liabilities to be under 5.5. Total long-term, I mean. We need the next page.
Thanks. There you go.
Next page.
Total current liabilities?
Nope. Long-term liabilities.
Thank you so much. Long-term
2.5. So that's a check mark there.
Wow, this is all.
It's all checks. I'm pretty sure it's an 8-pillar stock. That is correct. You have the right. You have the right industry.
Yep. Oh, wow. Okay. Take it easy, you two. You guys are frothing at the mouth over here. Pillar number 7 is free cash flow growth over the past 5 years, Paul.
Okay, so free cash flow of 529 up to 1.36, 1.1 billion total. That's a check mark, but we're going to multiply by 20. We want a $20 billion market cap.
I know what it is.
$22 billion market cap. What was the market cap?
What was the market cap? Let's take a small gander here.
Yeah, so it's a check mark there.
12 billion.
Yeah. So Mo, do you know what company it is now?
Yeah, I do.
Did you text me?
I told Tim.
Okay,
right.
So that was pillar number 8. Our price.
It's an 8-pillar company.
This is an 8-pillar. It meets all 8-pillar thriller. It meets
Can I
them
say
all.
what company it is? I got it off the dribble.
How did you know?
Because I knew.
There's no way. How?
I knew because I knew. Can I just say what the company is?
Yes.
It's
Please.
Pulte. I know home builders have amazing financials, all these 8 pillars, great numbers, but I think it's it's such a cyclical company that it just always worries me. I don't know if I'm being right in saying that, but I look at it going, it just scares me that they're so good financially, but then they get hurt so bad in the last recession. Now, in the Great Recession. Now, does that mean it's going to happen again? I don't know. Mo, what we're going to say.
So one thing I would do, just knowing that it's Pulte now, is go back to 2008, 2009. go through like 2015 and just see how they recovered. Even if it's not as bad as it was, they're going to take a big hit. So go and look at history on these
let's look at this right here. Look at 2006. They hit 15.
Oh, sorry, Paul.
So go pull up Pulte in the Everything Money software.
It's
Okay, now go to the income statement.
Oh, income statement. Thanks.
Now go to hit the June 2000. Hit the arrow to go to the next level right here.
Oh, cool, Paul. You're walking right through the software.
So look at this revenue growth back in the early mid 2000s. They hit 15 billion.
Yeah.
They got as low as $4 billion in 2011.
Oh my gosh! Wow.
I mean, that's a big drop. Scroll down. Let's look at their net income.
Okay, Paul.
Net income. Look at this net income. I mean, then look at these losses year after
Sorry, Paul.
year after year after year after year after year.
Oh my
Just
gosh.
loss after loss. It's just, that's the problem. They're writing down so many assets. Now, granted, I think Pulte has changed their model a little bit as opposed to before they would buy land. Now I think they're doing more of the Ryan Homes idea of we're going to contract with a developer and have options on their lots. So you have to look at that. If you think that if that is the new model, it's a less risky model. Less profitable, but less risky. And with the financials being good, it might be a good option.
This was a request from our Discord community. If you've never heard of this, that's not surprising. We sort of specialize in analyzing companies you've never heard of, and that's really the point. So if you keep hearing Apple and Tesla and Bitcoin in your ear, you might want to find companies like this to invest in. They have a lot more room to grow. They have great financials as a solid base, and we can help you with our Discord community. Paul can pull up what you'll get with our software, but if you click the link below, you can have access to these numbers. You can have access to a Discord community of like-minded people, about 6,200 people that's ever growing, and we are giving away a Tesla to one of them. So
And most importantly though, Seth,
go on.
all the things they get with the software, they get the mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, exclusive daily content, but biggest of all, in addition to other things, the Discord community with over 6,200 people have access to it. This is all for 87 cents per day. If you are serious about money and investing, this is a no-brainer. 87 cents a day. You spend that just on your cup of coffee, more than that on your cup of coffee every single day, and your cup of coffee won't make you a multimillionaire.
That's true, Paul.
Yep, so anyways.
In the Bidnass Nation, people are trading on a more vivacious schedule, Paul, than long-term value investing, and you can do that with the Egyptian dreamboat that is Mo Hussein. Go ahead.
So
Mo.
this is an interesting one, and kind of an inkling of why I thought it might be a home builder is I saw this back here and I was like, man, what happened back in early September or late August?
Tell me.
Well, all the housing stuff started to like sputter out and just kind of taper down a little bit, and this happened with them. So I was like, I thought this might be a home builder. That's why I wanted to see the financials first. But this is an incredible decline. Timo, this could be Tracker Share City. Because this one, you can throw a tracker share on. This is a dog stock. It's just going sideways. Wait for it to come back up. I do believe that this gap will fill. 90% of gaps fill. That's what I'm finding. So this thing is a good one for a tracker share. Throw it on there. You have to be very, very patient. Let it go for a very long time. Eventually, this thing will pop up into the sweet spot. Go and fill that gap. You're going to make money. That's what I think.
With a name like Mustafa Hussein, you don't have any trouble on airplanes getting on and off, do you?
The only time is like 3 times they grabbed me and like quartered me and carried me off a plane. But besides, they detained me for like
You're scared.
8 hours. But besides that, it was fine.
Mo's really good at waterboarding now. He's very good about
Surviving it?
I just sit there and they just like, now I figured out how to swallow.
It's like a nasal drip.
Yeah, I just swallow it now.
Paul,
it's not even torture.
your final thoughts on Pulte?
If you're comfortable with the industry, I don't know. All the numbers make all the sense in the world, and maybe it's just like a trap. I have no idea. I just get scared of, they went from $15 billion. Now, I do think now it's still different than 06 and 07, but it's still a frothy real estate market. So the question is, how much more can they drop? I don't know.
That's our take. We hope you appreciate the blind analysis. Follow along, watch another video, and join our community below. Fondle the thumbs up like you tickle Paul's belly on the way out. We know we love you. We love you. We love you. See you guys.